About 5 years ago, we asked Charlie Munger, we were sitting right there, what he thought of Bitcoin, and he said, rat poison.
Yeah. Today, Bitcoin is one of the 10 most valuable assets in the world.
The top 10.
Now, who are the other ones?
Gold up here at number one at $13.7 trillion. That's trillion with a D. It is gold after all. After gold, we have Apple, Microsoft, Saudi Aramco, Alphabet, otherwise known as Google, Amazon, silver, Nvidia, number 8. Coming in at number 9, we have Meta, otherwise known as Facebook. Close behind Meta, we can see that we have Bitcoin coming in at number 10. And if we look a little bit below that, we see Tesla and Berkshire Hathaway. So Bitcoin has comfortably placed itself in the top 10 list of assets ahead of Berkshire Hathaway. Now that must be some premium rat poison.
Bring on the rat poison!
Hello, my name is Steve and I'm into crypto. You're here because you're into crypto too, or you're thinking about getting into crypto. Either way, we are into crypto. And let's face it, if you're not into crypto,
you are a zombie. Now pay attention.
In today's video, we're going to be looking at Bitcoin, the OG of the space, the granddaddy of them all, and we're going to see what all the recent hubbub is all about. Now, as 2023 draws to a close, we're going to look ahead to 2024, and we're going to discuss why 2024 looks like it might be the biggest, most important year ever for Bitcoin. That's right, 2024 might be the biggest, most important year ever for Bitcoin. So, exciting stuff. So climb in, buckle up, we're going into crypto.
You're excited. Feel these nipples.
Saying 2024 is going to be Bitcoin's biggest year is a pretty bold statement. After all, Bitcoin is what started the revolution. Satoshi's paper is what began it all. So you might ask yourself, what makes 2024 so special? Well, it comes down to three major forces, and these three forces appear to be aligning themselves perfectly.
Number one, step forward.
The first major force impacting Bitcoin in 2024 is the macro environment, and specifically interest rates. And this will impact the demand side of Bitcoin. Now, as of this video, Bitcoin is sitting in the $43,000 range, having risen nicely from its $15,000 low a little over a year ago. Not too shabby. In fact, not only did Bitcoin go up in price last year, it wasn't alone in that climb up the hill. The S&P is also up 20%, the Dow is up 10%, and the Nasdaq is up a whopping 35% year over year.
Pretty good, guys.
So what gives? If it looked like we might have been heading into a recession and inflation was such an issue, why are these assets up? Well, it's based on the fact that the stock market and Bitcoin are forward-looking investments. People generally look out 6 months, and this means that the prices are actually forward-looking prices. Now, what the run-up in prices tell us is that the market was starting to price in rate cuts. The market was anticipating that the Fed would start to stop raising interest rates.
When you look at a lot of other places that, right, hey, the Fed's going to cut rates and that's going to be great news. But my understanding from how I read this is if the Fed cuts rates in the first half of the year, it's going to be because the economy's in big trouble. So maybe it's not something that's worth cheering.
Now the question becomes whether this was premature. Was the market premature or not? Well, yesterday we got a nice present from that elderly man with white hair. No, not that elderly man with white hair, the one without the beard.
Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news.
And what Santa Fed had to say was a big deal, because according to the Fed, they are stopping raising rates, and they're going to pivot in 2024 as they begin to lower rates.
Federal Reserve leaving interest rates unchanged at 5.25% to 5.5%, a unanimous decision in the December meeting. The Fed says growth has slowed from the strong third quarter pace, saying inflation has eased over the past year but remains elevated. It's the first time they said anything positive about inflation for a very long time in the statement. And they backed off somewhat their bias to hike, saying it was now determining the extent of any additional policy firming, inserting the word any into the statement for the first time. They lowered their 2024 Fed funds outlook to 4.6% from 5.1%, so half a point down, forecasting on average for a Fed official 80 basis points of rate cuts next year. It had forecast just 50 basis points from a higher level.
This is important to Bitcoin because when interest rates are high, as they've been the past couple of years, Money moves from risky assets such as stocks and especially Bitcoin. It moves from risky assets or risk-on assets. It moves then to risk-off assets such as U.S. Treasury bonds. And that's what we've seen over the last year and a bit. Why does it do this? Because basically you can get a decent return from something that's safe. Treasury bonds are essentially risk-free. You can get a good return on them. And when times are tough, people will take that bet. Money, like water or electricity, in fact, both of those are energy, and you should think of money as economic energy. That energy flows. It flows from one asset class to another. Now, the past couple of years, it's flown from risk-on assets to risk-off assets. It always flows back and forth. What we saw yesterday was with the Fed's recent announcement, it looks like the flow has stopped. Going to move from risk-off assets to risk-on assets. And this is good for Bitcoin. It's a big deal.
It is a big deal.
In addition to the money in play changing direction, there's a significant amount of money that's been sitting on the bench. It's kind of like a wild animal, just kind of sitting back in the bushes, watching, waiting to strike, waiting for that right time to strike. The question is, will it get back in the game in 2024? Based on what we heard yesterday from the Feds, my bet is on yes.
I think so too.
Let's not forget that 2024 is also an election year in the United States, and the government likes to give people things they like during an election. It tends to make people want to vote in their favor. And when you ask the question, what do people like?
I want money.
So with the Fed signaling they're about to inject more money into the economy, 2024 will see the demand side of Bitcoin feel the love again. It hasn't felt the love in a long time. That love is coming back as money or liquidity moves back into the economy. It moves into risk-on assets, and it moves into places like Bitcoin. 2024, in terms of a macro environment, is going to feel the love again.
Don't you guys feel the love?
Number 2, step forward.
The second major force that will impact Bitcoin in 2024 will be the Bitcoin halving, that beautiful event that we look forward to every 4 years. Now, the halving is coming up in April of 2024. So for those of you that are new to crypto, we're going to do a quick little recap. But for those of you that have been in crypto, if you're like me, you like hearing about this because it's just such an awesome thing about Bitcoin. And it truly is what makes Bitcoin Bitcoin. Now, Bitcoin was created, or the first Bitcoin was introduced to the world on January 3rd, 2009. At that point in time, there were 50 Bitcoin rewards per block. A block is produced about every 10 minutes, which gives us a daily output of 7,200 Bitcoin per day. Now this output, it was steady until the first halving event, which occurred in November 2012. After the first halving, rewards were cut in half to 25 Bitcoin per block, which gives an output of 3,600 Bitcoin per day. At the time of the halving, the first halving, the price of Bitcoin was $12. Yeah, that's right, $12 per Bitcoin during the first halving. We now fast forward to the next halving, which occurred in July of 2016. And we can see here that the rewards were reduced to 12.5 Bitcoin per block, which gives obviously a daily output of 1,800 Bitcoin per day. And if we look at the price at that point in time, it was $663. So at the first halving event, the price of Bitcoin was $12. The second halving event, the price of Bitcoin was $663. Fast forward to the next halving event, which occurred in May of 2020. Again, the rewards are cut in half. They're now reduced down to 6.25 Bitcoin per block, giving a daily output of 900 Bitcoin a day. And the price at this point in time was $8,740 per Bitcoin. So like I said, the next major event, or the second major event that's going to impact Bitcoin in 2024 is the halving, scheduled to occur April 2024. The rewards at this point in time will be reduced to 3.125 Bitcoin per block, giving an output of 450 Bitcoin per day. Now, we don't know what the price will be because obviously we can't see into the future. The price today is $42,000, $43,000 per Bitcoin. The price then is anybody's guess. But there is one thing we do know. After the next halving event, so after April 2024, Bitcoin will become scarcer than gold. That's right. Bitcoin will be scarcer than gold. Remember gold, that number one most valuable asset in the world that has a market cap of $13.7 trillion? Well, after the next halving event, Bitcoin will be scarcer than gold. And that's a big deal.
It is a big deal.
How do you know that?
We can use what is called the stock to flow ratio to calculate Bitcoin's scarcity relative to gold's scarcity. Now, this ratio calculates how long it will take using today's rate of production, called flow, to replace the existing inventory, called stock to flow. We can calculate this as follows. The current stock of gold is 244,000 metric tons. We can then identify the production rate of gold, or the amount of gold that's mined annually, and that estimate is somewhere between 3,000 to 2,500. So we'll take the middle number, 2,750. So taking 2,750 and dividing it by 244,000, we get 88.7 years. Now looking at Bitcoin, we have a current stock of 19,500,000 Bitcoin, and we know that our daily output of Bitcoin is 900 Bitcoin per day. Multiplying that by 365 days, we get a current flow of 328,500 Bitcoin. So dividing 328,500 by 19,500,000, we get 59.4 years. So before the halving, gold is scarcer than Bitcoin. However, after the halving, the stock to flow ratio is 19,500,000 divided by the current daily rate, which will be 450 a day, times 365 days, which equals 164,250. Taking 164,250, dividing it into 19,500,000, we get 118.7. So we get 118.7 years it would take after the halving event to replenish the current stock of Bitcoin. So we can see that after the halving event, Bitcoin will become scarcer than gold. And that is a big deal.
Yes, we know.
Brings me to my third and final point. Number 3, step forward.
The third force is the spot ETFs. This has never happened before.
Approval process going for a spot Bitcoin ETF. I know you're facing a window in early January. What does that look like?
Well, Sarah, we have, I think it's between 8 and a dozen filings. I'm a chair of a commission. I'm not to prejudge anything, so that's going through the process right now. And as you might know, we had in the past denied a number of these applications, but the courts here in the District of Columbia weighed in on that. And so we're taking a new look at this based upon those court rulings.
For those in crypto, do you remember the first time you transferred money into an account? Do you remember into an exchange? Do you remember the first time that you bought crypto? Remember the first time you created and used a crypto wallet? Remember how you got butterflies in your belly the first time you sent that first crypto from one wallet to another? Well, I do. It was scary, to say the least. You know, it was exciting, but yeah, it was scary, especially when you had to wait, when the network was busy and you had to wait for validation to complete and confirm the transaction. It seemed like an eternity. I remember waiting first time I did it, and the voice in my head kept saying, "What the heck are you doing? It's gone. Where did it go? How will I know if I'll get it back? What's going on?" And it's scary. Well, most people won't stomach this, quite frankly. It's too much for them. Most people want to go to their bank. They want their financial advisor. They want to have safety when they make that purchase, even if there's a fee involved, right? Most people don't want to be their own bank. At least they don't want to today. Now, even though this goes against the whole spirit of Bitcoin and the blockchain revolution, in order to bring the masses on, we need to approach it differently. The key is that adoption for the masses, it has to come in baby steps. And it will need to come through familiar channels. It will need to come from people and institutions that make them feel comfortable. They'll need to feel reassured. The masses will not trust these types of people. The masses, like all of us, they'll need to be taught, they'll need to be educated, to be orange-pilled by people who look like this. people who make them feel safe, make them feel comfortable, people they're familiar with. And this is where the spot ETFs come in. The spot ETFs provide retail and institutional investors with an easier, fully compliant means to acquiring Bitcoin. It means that familiar faces and entities will provide them with not only the front door, they'll not only open the front door for them, but they'll actually hold their hand as they walk through that front door. Now this means that the government, at least the US government, approves of Bitcoin. It will officially legitimize Bitcoin. And this is a big deal.
It is a big deal.
It will mean that Bitcoin is a fully legitimate asset, a brand new asset class in the eyes of people not yet into crypto. It will mean this to institutions, the pension funds, the sovereign wealth funds, the Federal Reserve banks of the world, the Apples, the Microsofts, the Teslas, the Amazons, and maybe, yeah, maybe, just maybe, the Berkshire Hathaways of the world.
Is it still rat poison?
Well, probably rat poison squared.
The times are changing. The foundations that we've been using to transfer and store value are changing. Well, in fact, they have changed. We know this because we're into crypto. It's just that the masses are about to become fully aware of this.
Industry experts expect that we could see the US launch its first spot Bitcoin ETF early next year. Do you think that's a realistic timeline? And are you feeling optimistic that your application and others will in fact get approved?
I actually do believe that we're going to see a approval early next year as well, sometime between January and March. I do have a high level of confidence that ours will be approved along with several others. As a matter of fact, I think most people will be approved all at once.
These are three major forces impacting Bitcoin and crypto in 2024. We're about to move into new waters. Now, this space is about to onboard new people, the likes of which we've never seen before. There's going to be lots of people coming in. These are exciting times for sure. Really exciting times. I hope you'll join me on this journey as we explore what it means to get into crypto and what it means when you're in crypto. Now, if you like this video, I would really help if you would hit the old like button and subscribe if you want to join the journey. I'd really appreciate that. Add some comments below. And I just want to say thanks for watching. Stay safe, be kind, and keep learning how to live in crypto.
And this is just the beginning.